And you're very welcome to the final edition of the Breadwinners podcast. I am your host, Pauric Lisa, and thank you very much for joining us. But all is not lost. We are, of course, rebranding the Breadwinners podcast. We're going to now call it Solid Foundations Property Podcast. So I'm delighted to say I'm joined by my very special guest. I'm a co-host moving forward for the Solid Foundations Property Podcast. It is, of course, give her a drum roll. It's Lisa O'Reilly. Hello, Lisa. How are you?
Well, Pauric, how's it going? Delighted to join you on the new podcast.
Yeah, well, it's going to be good. We've been talking about this for some time. It's been in the making, and it's been something that we've been speaking about. So, look, let's get straight into it, Lisa. You're very welcome to the very first edition of the Solid Foundations podcast. You are a property investor like myself over in down in Waterford. So tell us a wee bit about yourself, and suppose we'll touch into your journey, because I think first of all people will like to know a little bit about us.
Yeah. So I'm from Waterford, despite the dodgy Australian accent. Originally, I'm from London, moved over when I was 14, so did all my schooling and college over here. I qualified as a chartered accountant, and I was like really aggressively kind of climbing that corporate ladder for 14 years. But little did I know, it was really because my sister, who was a year older than me, she was like an accountant, and I was just basically copying her. I didn't think there was any other way other than accountancy. So I was aggressively chasing that kind of corporate ladder, and really not loving it though, not loving that whole corporate structure, but didn't know how to kind of get out of it. And so 2 years ago, I was in a job and I had a really bad experience. And I just decided, that's it. I don't know what I'm going to do, but I'm going to get it out. So I read Rich Dad Poor Dad, actually, by Robert Kiyosaki. I was kind of like at a crossroads. I didn't know what to do. So I read Rich Dad Poor Dad, and like I thought I was an accountant. I knew everything there was to know about money. And it was there where like I realized, sugar, I have very little assets here. I'm just literally trading time for money. I had a good salary, but I was literally just trading time for money. So he kind of, said property or whatever. So that's when I embarked on some property training. Then over in the UK, online and physically, I was going over to the UK all during COVID. And that was 2 years ago now. So now I'm a fully fledged property investor, raising money from private investors and invested in property in Waterford. So yeah.
Yeah, and not only that, you're getting your hands dirty as well. We do see you're not shy to roll up the sleeves as well, Lisa.
No. I really do love the versatility of it all. I don't necessarily like people to tell me what to do. I'd like to experience it first and actually get hands-on experience and then decide whether I like it or not. So some of the things that I'm not too keen on is kind of like tenant communication and dealing with tenants and stuff. So I'm looking to get that outsourced at the moment. But in terms of like project management on the builds, and I've just opened up a couple of Airbnbs there. I do enjoy that type of stuff. So but getting my hands dirty, yeah, definitely. I love doing it.
So you've been traveling quite a bit, doing a lot of education, and suppose frustration would be one of the things that a lot of people would say. Getting the right information for the market would probably be something that is a barrier.
Yeah, for sure. So like I go to the UK, well, I was up until recently going over once a month for my kind of mentorship on property education. And yeah, like, you go over there and you can get maybe 50 to 60% of the knowledge that you can, like that's relevant to Ireland. So you come back to Ireland then and you've got to kind of figure it all out from yourself. So yeah, I've made some really kind of costly mistakes and had some huge learnings in the last 2 years. But look, I wouldn't change it. I wouldn't do it. I wouldn't have done it any other way, to be honest. But yeah, like it'd be great, like if we can kind of use this podcast to kind of get some Irish specific information out there.
And that's suppose we're going to delve a bit deeper on those those issues that you had. And suppose coming back, one of the information aspects, we hear a lot of people that does this type of does the training and comes back and tries to adapt it, is that, as you indicated, only 60% might, and I would feel it's a lot less actually, because the lending is a lot different. And I suppose you as an investor as well, but it's really hard in Ireland, Northern Ireland, the UK. There is a housing shortage. It makes it really difficult in that regard, doesn't it, Lisa?
Yeah, so with the housing shortage, it's good in terms of being an investor, it's good in that you've got no shortage of tenants. But I suppose coming back to Ireland, what that's meant is they've put a huge amount of regulation in the market in terms of like the residential tenancy board, the rent pressure zones, and then to top it all off, then the interest rates are on the rise. And then on top of that, then like banks have left Ireland saying we're only left with, say, 3 pillar banks, and they're not keen for the buy-to-let market. So then you are really kind of caught with the 2 to 3 lenders who really want to lend on residential buy-to-lets.
It's lip service, really. That's what you're telling me.
Yeah. Like I have got refinance, but again, I only had maybe an option of three lenders, and you're just like a price taker at that stage. You can't kind of shop around really in Ireland. You have to kind of take what you're given, and what you can get. But look, I suppose it's not all doom and gloom because of all these barriers to entry. I suppose I don't have to do as much in terms of trying to source property that gives me a high yield, because the competition isn't there's not as much competition over in Ireland because of all the barriers to entry. So look, I suppose it's kind of like, swings and roundabouts,
And that, I suppose that comes to the fact that there's, I know you say there's it's difficult to get in, but it's also, it's not everywhere strategies work in certain areas, because a lot of areas around Ireland, it's very rural, and I suppose it's the cities that are more attractive, but obviously the cost of purchase is a lot more.
Yeah. So like as I always say, kind of, the likes of, say, Dublin and Cork, just say if you've got the same house in say Dublin versus, say, Waterford, say, and I purchased the house in Dublin for, say, 350 and it needs work done to it. I purchased the house in Waterford for 150 and it needs work done to it, and it needs the same level of work, refurb work done to it. So say if I put in, say, 50 grand into each of those houses for refurb, the house in Dublin, I'm now in it for 400 grand, and I can uplift that value nearly immediately to, say, 550 or 600 grand. You're getting that 150 to 200 grand uplift. In Waterford, you're in it, say, for 200,000. So remember, you purchased for 150 and you've done a refurb for 50. So you're in it for 200,000, but you're probably only going to get about maybe 230 of a valuation at most. So the building cost, I know it would be slightly cheaper in Waterford compared to Dublin, but there's not a massive amount of difference in terms of like the labour cost at the moment. So therefore, you're going to get more kind of capital appreciation in the likes of, say, Dublin and Cork, as opposed to the regional cities, and then even less then in terms of like kind of more rural areas. So in terms of like location, if you're looking for that capital appreciation and that quick buck, you turn it around and you make a big profit then and sell it immediately. Like Dublin would suit like the flips, and it would suit the assisted sales, whereas Waterford or other regional cities where you're not going to get that capital appreciation, it's more about the long term, about like your rental yields, because your yields are much higher down in the regional cities because the prices are a lot lower, but the rents are still good and strong.
And do you feel that I suppose that everybody looks at Dublin as the main city, and suppose that's where a lot of people like to start. They like to get into those areas, but maybe they might not be suppose Yeah, barrier to entry can be quite difficult.
Yeah, like Dublin would be a good one to start if maybe for a couple of rent to rents, where maybe you're not putting in so much of your own money into it, because if you're starting out, you need a bigger bank balance to start out in Dublin. So the more you're putting out, the more risk I think you're at. So if you're really starting your journey, and you don't know, you're not sure, you're just testing the water first of all. Dublin can be actually a risky place to start if you're using your own capital. So if that is your area, if Dublin is your area, then a couple of rent to rents probably would work, a lot better. And then if you are in the regionals like Limerick, Waterford, even Athlone out in these areas, Galway, some of these places, it's really good to start in where you're from, because you really know the area more than anyone else. So I wouldn't go looking in Dublin right now, because it's just, I'm not familiar with some of the areas, so I'm happy to stick to say what I'm doing for the next kind of 12 months anyway, and then we can see where we go from there.
Yeah, you're listening to Solid Foundations, the new property podcast, just heading your airways. It's Pauric Lisa here, joined by Lisa O'Reilly, and we're really delving into the Irish, Northern Irish, and the UK markets. And really, at the start of the first podcast is getting to understand Lisa and her strategy and what she really looks into and how she analyzes that as well. So she's going to give us some good nuggets. Lisa, suppose looking at I know you've got exposure to the UK market, and it is it's a difficult situation at the minute, because there are over 1 million mortgages that are coming off fixed rate, and they're going into from a 2% to maybe a 6%. It's a difficult period in the UK. There was a report out today that indicated that with the inflation that was reported at 9% last week, who makes up the numbers, I don't know. But there was indications that it could be lowering the interest rate. And they really, really the government need to step in here and do something. Would you feel that?
Yeah, but like with inflation, I know the property market is suffering at the moment, but say with inflation, they've got to curb it some way. And the main way they do that is with the interest rates. So they're trying to stop spending to bring that inflation rate kind of down to a more of a manageable level. So yeah, like it's tough, and especially some places, like especially around London and some of those kind of those top cities, like they were only achieving say like a 3 to 4% yield anyway. So when I was going over to do my training last year, there was a couple of kind of London or around the area in the room, and yeah, they were only looking at like kind of 2 to a 4% yield, and a 5% yield in London would have been very good. So you can imagine then the struggle that they'd be under when they come off a fixed rate, say, because they were used to paying like the 1.52% up to a 6% interest rate. So yeah, I'd say there's going to be a lot of if there's not already, there's going to be a lot of properties come on the market as people start to struggle to pay the mortgage.
Yeah, and as you look at yield, suppose as a terminology in property for people that might not know, just give us the explanation around that. What does that mean, Lisa, if I was the newbie?
Yeah, so a yield basically is the back of a fag packet kind of calculation. It's a universal calculation. In my mind, it's a universal calculation. So it is your gross rental income.
So £1,000, say, yeah?
£1,000 a month, multiplied by 12, which is €12,000 for the year, say for rental income, divided by the purchase price of the house. So say the purchase price being the actual money that you use to pay for the house plus any refurb work. So that's just back of the fag packet. And I suppose in some of the cities like London, they're only getting maybe 2 to say 4.5%, 5% yields if they were lucky. It's out in the regional areas that you get the higher yields. So when interest rates rise and you've got a mortgage and you're highly geared, it means that you're going to struggle to pay the mortgage back when interest rates rise.
And I suppose we're starting to see that in the Irish market as well. There's interest rates starting to increase a little bit. Um, that could probably will stumble the market a little bit. Do you think?
Yeah, for sure. Like when I got my first property there in 2019, I was on like 3.2% or something like that. And slowly over the last 2 years, I've refinanced a lot of the portfolio, and I can't get fixed. I can't get a fixed mortgage from a bank, so I'm on a variable rate, and I think at the moment I'm paying 7.2% at the moment. So, and every kind of couple of months you get the letter through the dreaded letter through the post to see to tell us that there's another interest rate increase.
So dealing with that, Lisa, I suppose from a property investment point of view, or even buying a home, it's probably it's important to mitigate that risk a little bit. How can you do that? Because I was one of the schoolboys of 2004, 2003, that time, and I suppose I learned from my mistakes then was sometimes buying that new property isn't the most savviest thing to do. So what advice would you give to people, maybe, first of all?
Yeah, so like location, first of all, is key. So, buying one of these new builds kind of in these estates that they're now building, stay away from those. They charge VAT on the new builds. They're really expensive in the first place. They tend to be out of the city. They tend to be on the suburbs now because all the city land has been used up. So I always stick to kind of city centre houses, the older houses that require kind of cosmetic enough type work. I don't kind of.
So not the structural aspect. So structural is
No.
taking down walls. It's you need to know what you're doing basically there, big time. And I'm not saying that you don't need to know what you're doing if you're going into it on the cosmetic route, because there can be some landmines there as well.
Yeah, especially when you're dealing with the older houses. So if you go tearing down loads of walls, you never know what you're going to find, sort of thing. So rising damp is a big one. Like if you can kind of go into a house and you don't see the rising damp, it's kind of like, yes, because you really know that it can be very cosmetic then, just maybe a rewire, maybe a new bathroom suite, so, you can kind of not guarantee the cost, but you can kind of be more safer on the cost estimate. And then I suppose it all depends then on your strategy. So the way my tenants then, I operate 3 different strategies, but the first one is buy to let to a family, straight out family. I'm not too keen on that model, especially in Ireland, due to all the regulation that's out there. And if you've just got some.
Looking at that, look, the regulation, there's been so much noise about it over the last while, and suppose it's been one of those aspects that people are nearly scared to speak about, and it has to be talked about, that you have to, you have to develop properties, you have to ensure that but you can't completely, from an investor point of view, it's scaring them off. Let's call a spade a spade. They're getting out of it, they're going, this is too much hard work. And yes, there's rogues everywhere, there's rogues in every type of business, and they have to be dealt with in a way. But I think it's one of those that it is a market that is over regulated in some sense.
Oh, it is. It's actually so over-regulated that it's actually going against the tenants now, because landlords are leaving. The one big bugbear of mine is the rent pressure zone and the rent caps. They're actually counterintuitive now. They're actually completely going against the tenants now, because once them rents are then capped, and these interest rates are now going up. So you can imagine there's no profit now to be made in standard buy-to-lets. So therefore, if there is something gone wrong with the property, a landlord just can't afford to fix it. So it's actually going against the tenants. And then obviously then when landlords are then selling up, especially the older landlords, and they're not being replaced because of all, the regulation, well, then it's fewer housing available for a much bigger kind of abate, especially with, say, the Ukrainians coming in and all the people coming in. It's a massive kind of impact on supply versus demand. So yeah, like the over regulation is definitely a major contributing factor. There's a lot of people talk about kind of give tax incentives to get landlords back into the market, but my thing about taxes is tax comes after the event. You only pay tax on profits. If you make a loss, you don't pay tax. And landlords are actually starting to make a loss now because of the increase in interest rates and the rent caps where they can't increase the rents. So, what's the point in talking about tax breaks and tax incentives when you have to make a profit in the first place? Like, making a profit, for a landlord making a profit is not a nice to have, it's a have to have. Because if a landlord doesn't make a profit, he simply won't operate. And that's what we're seeing at the moment. So, it's just all this media hype about kind of, vilifying the landlords. It's totally kind of like lazy kind of media reporting, and it's going against the whole market,
So it's a shot to the dark there from Lisa on that one. But
sorry,
no, it's good to have a conversation about it. But that's what the Solid Foundations podcast is about. It's about being, a clear line of information, communication that is common. And look, there is a lot of issues when you boil it down to one thing for me. And what I do like to see is the rejuvenation of areas. There's so many buildings. There are 160 odd thousand, I think, from the last time I heard. I could be far out on that, but I know there has been reports, and a lot of people have reviewed properties that just cannot be redeveloped, and for some reason or the other, maybe the land or the individual that's selling them just is asking for far too much money. And we're seeing that happening now since the grants, as we spoke about in Ireland specifically, have been dished out a little bit, and it's good to see that happening. I think we see a lot of it in the UK, where they're rejuvenating town centres, and it's fantastic. It's bringing people back to the town centre. For me, that's an economic benefit, first of all, for the local shops that thrive on having people close to them. Now we've seen in Celtic Tiger times in Ireland specifically, driving a lot of the small businesses, not necessarily out of the town, but they had to stay in the town. These new shopping centres, if you want to call it, were a fashion, still are, but they took the heart out of a lot of smaller towns with less than, we'll say 10,000 people. But the opportunity there now is to regenerate these places, and that is one aspect that they could do. I know that there've been some repurposing of buildings since the Ukrainians have come in, and maybe that has opened up the eyes of other developers to see that opportunity as well, Lisa.
Yeah. Well, say some of the Ukrainian properties I'm after seeing, they're poor enough quality. Like, it was kind of like they were kind of desperate, and so you just kind of shoved them in a lot of these places, but yeah, like in terms of rejuvenation, what you were saying about kind of some of these city centers, like when you drive through the city and you see all these kind of dilapidated old buildings, to get some people like us, like investors, kind of to come along and say, do you know what, we're going to turn that into something nice, and the location's perfect. They're slap bang in the city centre, and they're an eyesore. And if you give us the incentives to do it, if the government gives us the incentives to do it, it's the likes of us who will do it. A first-time buyer will never kind of walk through the city centre and go, oh, I love that dilapidated building, I'll take that one on. They won't have the knowledge, the skills, the wherewithal to be able to do it. So these grants that you're on about, it's so the Irish government from up until this year, they were given a grant for vacant property, up to, I think it was up to 30,000, but from the 1st of May this year, they actually opened it up to investors. So before that, it was only homeowners could use it. And at the time I was saying, look, that was never going to get any traction, because first time, second time buyers, they don't want to do these big, massive refurbs, you know. And so, yeah, they opened it up to investors from the 1st of May. And I was talking to Simon Coveney there about 2 weeks ago. He was in the Waterford there lately for a business networking event. And he said that there's been a big take up now in Cork, which is where he's from, I think. And so they're seeing encouraging numbers, but it completely makes sense to provide these grants to investors to do up these vacant properties, because we're like, you know, they will actually get used then, you know.
And even individuals that are maybe are just thinking about to have an old property, they could do it up as well. So there's opportunity there as well. Listen, just looking at the suppose the Irish market is one thing, and as we delve into the cities, there are different micro aspects that work really well. We've seen the strategy of a HMO, which is a house of multiple occupancy, something I'm looking into quite a bit and excited to be doing as well. We've seen how successful it has been in the UK. Do you see that trend coming into Ireland as much? They are quite popular in Northern Ireland, in Belfast and Derry City, where I operate, but it is a trend that's coming across the pond.
Yeah, it's a trend that's coming across because it has to come across, because there's no other option. So that's the main model that I operate down in Waterford. So basically, the reason HMOs is where, say, 3 or 4 young professionals all agree to share a house together. So they basically rent a room as opposed to renting a whole house. So the reason why I like this model is because you've got, say it's a 4-bedroom house, you've got 4 incomes paying into the house. So say if one income loses their job for whatever reason, or they move out, you've always got the 3 kind of rooms to make up the rent. So you're not so tight. It's more risky when it's just one family, say one income earner paying, that you've got to rely on to pay the rent. So I do like the HMO model. It does work really well. And actually it's, you've got a lot of workers, a cohort of workers who say are on maybe 30 grand or less as an annual salary. And they would really struggle to pay for the rents these days, like the way kind of the rents have crept up. So they wouldn't be able to afford a house by themselves. So actually, you living with like-minded kind of young professional people or whoever it is, it just makes a lot of sense. They can share the bills, and they are only paying for a room. And a lot of them actually go home at the weekend. If they're young Irish kind of workers, they go home to their home counties, or alternatively, I've got a good few kind of non-nationals living in mine, so they're around all weekend too. But it's a model that's working really well.
It is, and it's an interesting one as well, and it comes back to a lot of these high-end HMOs, as they call them, which is a house of multiple occupancy. Co-living is another beautiful name they have for it as well, but they really are getting very fashionable looking from what I see. The decor that is starting to happen, and I've seen some of your stuff. It's really nice. It would really entice you to stay in a place, and that's what people they want as well. They want that. Look, some situations they might have to work from home, or which hasn't taken off as big as they predicted originally. I think everyone wants to get back into the office, but you need to have that option as well, I suppose, for that young professional.
Yeah, I suppose that the images you're after seeing online, I'm also operating 2 Airbnbs, and that's where I've gone high end with the Airbnbs. Interestingly, when I started on the HMOs, I kept them very basic. But looking back now, there's a lot to be said to go for a higher end HMO and really put in like money and thought into the design, because the more money you put into it, the more kind of more rent you can kind of command, or the better quality tenant that you're going to end up getting. So I've kind of, I'm learning as I'm going along, and I would have kept the HMOs, some of the HMOs pretty basic, and I constantly get a lot of turnover in those ones. So the next time when they move out, say I'm going to just strip it out and put in, put a bit of money into it, and hopefully, you get a kind of, because what you got to realize is with HMOs, you do have a lot of extra tenant turnover compared to, say, a standard buy-to-let. So if you can create that atmosphere where they don't want to move out, that they're actually really enjoying their home and they're enjoying sharing, then you're in a much better position. So I'm kind of living and learning as I'm going along with these HMOs.
We'll be taking notes, looking forward to getting so many notes of you. You're listening to the Solid Foundations podcast, a new property podcast with myself, Pauric Lisa, and Lisa O'Reilly. We're really delving in. Today is the very first edition of the podcast, so we're a little bit green behind the ears, but we're just, as I say, on a monthly basis, we'll be bringing you knowledge and as much as we possibly can on different strategies, on different areas, and also we will be looking into taking on special guests as well. We do have a couple of crackers to be interviewing also. The main reason behind the podcast, Lisa, we had loads of conversations now over the last number of months about doing something and figuring out what it might be. But first of all, for yourself, tell our listeners what exactly you want to give them.
Yeah, so basically Solid Foundations is to give someone a solid foundation if they do decide to invest in Ireland specifically. So yeah, I'm a chartered accountant as a background, so it's all about kind of profits and reducing your risk. So yeah, that's the kind of things that I want to talk about, but kind of in a way that's like raw, honest, like my opinion, our opinions, say, and giving it to you the way we see it as we're operating. So yeah.
Yeah, well, I'm in sales. I've been in business for quite some time. I've been wet around the ears a couple of times. I've stumbled when it comes to doing different things and different strategies, and learning along the way. Having to travel quite a bit to do, as Lisa indicated, about doing investment training, something I'm really, really passionate about, interested in as well. And it's great to get, as the old saying, people that are interested in something as well. And for me, it's about giving back information that I mightn't have got when I was younger, in a way that suppose you have to travel, you have to listen to let me just say, voices that you might not be aware of, that you're trying to learn off as well. But suppose you've taken it a step further, similar to myself. We've got our own property meet on a monthly basis. I operate in Derry City, beautiful Derry City, fabulous hotel opening up there now shortly as well. And you operate down south as well. So I have the Northwest Property Meet, where we bring in monthly speakers as well to give that extra bit of knowledge. And Lisa, you're at something very similar as well. You've got your fourth meet coming up now shortly.
Third, yeah. So the South Property and Business Network, Clayton Hotel, or the Silver Spring Hotel in Cork. And our next event, I think, is on Thursday, the 7th of September. We took a little break for the summer. And yeah, we're back again on Thursday, the 7th of September. So like that, trying to bring kind of like-minded people into a room, investors, kind of, anyone that's interested in property, or anyone that kind of supports the property market. And it's all about kind of, building relationships, advice, kind of giving back, and hopefully being able to do business.
Yeah, exactly. And suppose the Northwest Property Meet, we're actually not meeting till the end of September. So it's last week, the last Thursday, September, October, November. We are just putting together our speakers for 2023-24. Imagine that. So really looking forward to that. And suppose I started the Property Meet about 2 years ago due to the fact that there was no knowledge. Nobody was really talking about it. And again, Lisa, you're right. There's so many good people giving out so much information. And it's not only, suppose, there is a lot of people buying houses and flipping them on, but there's so much other strategies. Like there's like some of the stories from our members that come is just phenomenal. They're either working in the property industry as an interior designer, there's either also potentially just doing something that you would not think of. Staging has become massive in Ireland and in Northern Ireland, where I'm based as well, and in the UK, probably a lot more popular in the UK, staging your property, and even for selling it and giving little tips like that has been phenomenal. But as you and myself are very much about the person behind doing those types of things that, you know, inspire you to push on, to do more yourself, and it's good in a way to have that positive environment that you look. There's no barriers in this particular industry either. And that's something that I really like. Yes, there's risk, and some on the podcast we will talk about risk, because look, risk is one part of it, but there's so much opportunity for people with that economics of property development. It has such a kick on into the construction sector. If you're a plasterer, you're an electrician, if you're actually manufacturing products as well, it has a massive play on the economy. And that is something that is not really mentioned that much, Lisa, is the economy factor of construction. It keeps solicitors going, it keeps estate agents going, it feeds a lot of families, and that's the important thing here. That's why we kind of mentioned about the bad press it always gets. But if you didn't have it, or if you didn't have those aspects of it, there's a lot of people be unemployed, and it's very important to have a balance as well on the discussion. I feel, and I think that there's so much of that just not even talked about. I don't know how you feel. That's my rant.
Yeah, no. There is a lot of bad press, and there's a lot of lazy press. But money is energy, and property moving around. It's all it's the way it's meant to. It's the way the economy kind of moves and generates. And like you said, it keeps so many different families in different industries kind of going. So I think the thing with Ireland is we very much got burnt in the crash, probably more so than a lot of other countries. And people have that really etched on their mind. But we probably are going to go through a recession, because as with anything, the cycles, it goes up, it goes down, it goes up, it goes down. Overall, property in the long term will go up. But do I think we're going to see this major kind of crash that we saw, back in 2008, 2009? No, I don't think so. I think the banks back then were really kind of, just giving out money willy-nilly, literally 100% mortgages, and, whether you could afford it or not wasn't necessarily a factor. Now, like, it is so hard to get finance from the banks. And they're only given 70% loan to values, so they're really after kind of curbing how much money they're lending out now. So in terms of like that massive crash, and then on top of it all, we've got this housing crisis that it's not going to get solved in the next like 1 to 2 years. It's gonna take a good 5 to 8 years to get any bit of a handle on it. So yeah, I can't see it being a big massive crash, but at the same time, I'm always kind of, and I as I say, you are as well, Pauric, I'm always kind of keeping my eyes and ears open on interest rates, house prices, where the market is actually going, and staying kind of close with the estate agents and kind of getting a good feel for where the prices are actually going and what the demand is like.
And you touched on a really good point. People are probably still have scrapes from that time. And look, we know a lot of them. And unfortunately, a lot of people did stumble into that. And look, there's a full discussion to have around it as well. There is aspects that people just, didn't end well for them in that particular way. But look, that's what it's about. Solid foundations, having a conversation about the different markets, looking at the trends, seeing what we can give to you as a viewer, a listener, wherever you're getting this particular podcast. Because we are going to put it out on all the socials. We're going to put it out on. It's going to go on LinkedIn, you can listen back to myself and Lisa's personal page. We'll have it out on the Facebook. We also will have it out on Instagram as well. So we have a lot of work to do, Lisa, to get the promotion side of it. We will do our utmost to bring you on a monthly basis the very best knowledge we can, and the best speakers as well, into our events. And your next event coming up, anything exciting happening that we should know?
So we don't have our speaker lined up just yet, but thanks for mentioning it, Pauric. We're working on it, and so we had two great speakers for the first two. So we had Pat Slattery on our first event, and he was a great success. So he's a public speaker, like he's just well able for it, and he was really, really good. And then the second event, actually, we had a property tax advisor. So he was really, really good. Brendan Allen is his name. And and he got great feedback and gave us some real good kind of nuggets of information. And so it'd be people that can kind of bring expertise around the property, kind of anything to do with property to kind of help us along.
And we'll put a link below as well for the Facebook groups that you can join. You find out a lot more of what's going on in the Northwest Property Meet and the South Business
give me the name. Network, yeah.
Property Business Network. You think I would know that by this stage, but anyway. Well, look, Lisa, it's been great, fantastic to launch our brand new podcast, and of course called the Solid Foundation. So don't forget, you'll get us in all the various outlets as well, and you will see a lot more of it on social media as well. But first of all, Lisa, we've covered so much today. There's been quite a lot about different strategies, but I think throughout the months ahead, we're going to focus on maybe one or two and really delve deep into them.
Yeah, that's a good idea. Yeah, we can go into more detail then. And if anybody kind of wants us to kind of, talk about anything that's of interest to them, send myself or Pauric kind of private messages, DMs, PMs, or leave some messages on our social media. The two of us are pretty prolific or, busy on LinkedIn, Instagram and Facebook. So just drop us a message for anything you kind of want us to discuss. And look, if we don't have the answers, we can try and get someone in then on this podcast to who is the expert and to have a discussion with it. So yeah, just drop us a DM or leave any messages on our social media pages.
That's it for the very first edition of Solid Foundations New Property Podcast. We'll be back next month. Thanks for listening to us. We'll talk to you very soon.